Friday, July 12th, 2019, Monaco 64, home of alternative economics and contrarian views. This morning I want to go over the bond market, how we've actually seen a spike higher in the longer term yields, not only in the United States, but also throughout other major countries. And I want to cover some comments by President Trump about Libra, the Facebook cryptocurrency, and cryptocurrencies in general. And I also want to talk about quickly about what Jay Powell said the other day in Congress about gold and the gold standard. Before that, of course, let's quickly look at where the markets are. It's 7:13 a.m. London time. So right now we've got spot gold up about $3 at 1406.80. I should say actually spot gold is up 3 Federal Reserve notes because according to the Constitution of the United States, the dollar is a weight of silver. The Coinage Act also of 1792 made it a weight of gold, of course. Spot silver is trading at 15.14, up 2.5 Federal Reserve notes, and it's up 0.16%. Stock markets continue to rally here. Even though yesterday it was mostly the Dow that gained, right now the Dow is up 86 at 27,169, up 1/3%. S&P is back above 3,000 at 3,687, up 1/4. NASDAQ 100 future is up 0.2% at 79.12. Currencies. The dollar is a little weaker here, not that much though. The pound is up 0.15% against the dollar at 125.42. Euro's up also 0.15 at 112.70, and the dollar's down 0.15 against the yen, 108.35. Dollar is unchanged against the Chinese yuan, 687.50. Crude oil, the WTI crude contract is up 0.2% at 60.65, and Brent is up 53 cents or 0.8% at 66.87. So now I will segue actually into the bond market. I'll look at where the 10-year yield is today, and I want to talk a little bit about the recent spike in yields all over the major countries, major currencies. So first, let's see where we are this morning. We are at 213, so up another just over 1 basis point. The 10-year yield. The 3-month yield has dropped quite a bit, mainly because of Powell's comments the other day that they're going to cut rates. So it's at 2.15 or 2.16. So the curve is actually disinverted or steepened. It hasn't disinverted yet, but it has steepened quite a lot, almost 20 basis points, because we're almost flat now, 3-month to 10-year, because we're at 213 in the 10-year, 216 in the 3-month. So there is still an inversion of 3 basis points. For my new viewers who might not know, I worked in the City of London as a futures and options broker for major banks, brokerage houses, for over 20 years. And the core of my business, what I concentrated on, was the bond markets. So I do know what I'm talking about here. And recently there has been a lot of talk how more and more government bonds throughout the world are becoming negative yield. I think the latest figure was 13 trillion. And this has been mostly because of the drop in the yields that we've seen in not only in the US, but in Germany, Japan, Europe, everywhere in the developed or industrialized world, as they call it. And I think investors, economists, central bankers are very complacent that to think that if they do cut rates and keep doing QE, that they're going to be able to control longer term bond yields, that they're going to go down and lower into negative territory. And yes, that has helped gold, but gold doesn't necessarily need that for to do well. Gold did well in the 70s as well with rising interest rates and rising inflation. So I think I'm not saying here that this is it. The longer term bonds are going to go down and yields are going to go up, and it's going to shock and surprise everyone. But I think we need to keep an eye on it, and I'll show you why. I've got some. I did some charts of the longer term bond yields. So I start with the U.S. and this I did this last night. We're even higher now. We're at 213, and you can see there that we bottomed around 195, and now it's starting to spike. What we need to keep an eye on is if this continues to go higher. Could this be just a correction in a market that is going to keep going down? And by a market going down, I mean the yield going down. And when yields go down for bonds, the prices go up, of course. So that's the U.S. Treasury 10-year yield. It's interesting that it's kept doing that, even though Powell did reassure the markets that they're going to cut rates, that there's risk of low inflation. Maybe the market is having other ideas, but as I said, one week's rally in bond yields doesn't make that a trend, so we need to keep an eye on it. So I just go over some of the other major bond markets. You've got the German Bund, which is a major bond market, the benchmark for Europe. We saw that it even went below the ECB's short-term rate, which is minus 0.4 there. So that's negative. It went below minus 40 basis points, or almost minus 0.5%. But now look at how it spiked as well, like the treasuries. So this is happening not only in the US. Yeah, and I know it's still negative, but it's going the other way. It's going towards positive. So now let's look at the Japanese, the JGB 10-year. Same thing. It spiked around minus 19, and now we're going back up as well. The JGB yield. Let's look at the gilt, which is the UK government bond. Same thing. Gilt yields are positive. They're not negative. But they went down to almost 65 basis points, and now they've rallied back up to almost 85 basis points. They're still below 1%, which is very low, but they're all spiking back up. Let's look at the French. They call it the OAT in France. That's the OAT. That as well, it went negative almost to minus 15 basis points, and now we're up to almost 3 basis points. So this is happening everywhere, and I think we need to keep an eye on this. Here's the Swiss as well. The Swiss went to below minus 65, and we're now at minus 50. This could be a black swan, something nobody expects. And why do I say that? Well, because for decades now, the Bank of Japan and the Japanese government, they've been able to keep interest rates very low and negative. And I think Wall Street, City of London, the central bankers, IMF, World Bank, they want, BIS, they want the negative rates because they know that the debt pile is so big that if longer term rates start spiking higher, everyone's going to be in trouble. The whole system will be in trouble. I personally think that would be a good thing because because if we go into negative rates and lower yields, it's going to keep this thing going and going. This slow bleeding of the system, this increasing inequality of wealth, and the very rich getting a lot richer, and the middle class and the poor getting a lot poorer. I'm not talking about redistributing income here. I'm talking about a fair system where everyone has the chance. Right now, it's not. So Quickly now to constitutional matters. And I have to say, I'm not an American, but I know a bit about the U.S. Constitution. And from what I know, and you might want to comment below if I make a mistake, unless something is in the Constitution, the federal government can't do anything. So the Constitution just kind of shows what power the federal or United States government has, what they can and cannot do. I think whatever is not there, so it's like a negative document. So the other day, Jay Powell was questioned in Congress by a representative about the gold standard, and it was amazing that they had no clue about the Constitution. And you kind of wonder, because I did find a picture of Jay Powell doing the oath of allegiance to the United States Constitution. There you go. I did find one picture as well of Donald Trump. He's got his hand on the Bible. He's doing the swearing in, oath of allegiance. So what does the oath of allegiance actually say? Well, it says here, I'm not going to read the whole thing, but it says that I will support and defend the Constitution and laws of the United States of America against all enemies, foreign and domestic. So I'm going to take an article here from Half Dollar, Silver Doctors. I like Silver Doctors. I don't read all the articles there, but this one's quite interesting. This was from a couple of days ago after Jay Powell testified. He said, and the article says, Jerome Powell just publicly admitted his hatred and continued destruction of the U.S. Constitution. And he's right, Half Dollar, because as he says here, Article 1, Section 8 of the U.S. Constitution says to coin money, regulate the value thereof, and of foreign coin, and fix the standard of weights and measures. And then he goes on to say, Half Dollar, this is why the US dollar has its, he says derivatives, a dime, a quarter, $5, or $10 are supposed to be specific weights and purities. And then he goes on to say, and that's why we have also Article 1, Section 10, make anything but gold and silver coin a tender and payment. And then the Coinage Act of 1792, of course, that's defines the purity and what a dollar is. So, I mean, that's the U.S. Constitution there. And for Jay Powell to say that, and even this representative there, she asked, we would have to pass new laws to bring back the gold standard, but she didn't read the Constitution, because you don't need to pass new laws because it's part of the Constitution already. And I just saw an article from the FT saying that Donald Trump hits out at Facebook's Lira. The article says Donald Trump has launched a stinging attack on cryptocurrencies, including Facebook's proposed Libra coin. So the Constitution only says what the federal government has to do and what it should accept as money. My understanding is that individuals in the states, when dealing with each other, they can use anything. The Constitution doesn't say anything about cryptocurrencies not being able to use by the people. So that's what I have to say about that. Please comment below. You might think I'm wrong about the Constitution and what it really is about. My understanding is that it's the limited powers of the federal government, but anything that's not there, individuals in the individual states of the United States should be able to use anything they want to barter or exchange. So I don't see why Donald Trump is having a go at cryptocurrencies or Facebook's Libra. I think President Trump and Chairman Powell, they should read the Constitution again. before putting, their hands on the Bible and swearing an oath of allegiance to protect and defend that document, because it doesn't seem like they are. The Federal Reserve note is totally unconstitutional. There's nothing that talks about the Federal Reserve note being money in the Constitution. So that's my rant for today. So let's keep an eye on the bond yields. I think that could be something that could put the cats amongst the pigeons, so to speak, for the whole system. As I said, it could be just a correction, and we're going to continue to see yields collapsing into negative territory even more. But you never know. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. By the way, Billy came down this morning, but then he went back up. He didn't want. He's like a lazy dog this morning. So I wish you all a great day. Take care. Bye.